In our F&B slot this afternoon, we take a look at South Africa's inflation, the Reserve Bank's announcement on interest rates, and the country's trade balance, amongst others. Joining us is Koketso Mano, F&B senior economist. A very good afternoon to you, Koketso. Welcome.
Thank you for having me, Thami. Good afternoon.
Afternoon. Let's take a look at inflation for December. It edged up to 3.6%. Is that contained? And what is your outlook for 2026?
It is certainly contained. I mean, if you look at our expectations going into the latter part of 2025, Tammy, and we spoke about this extensively last year, we had anticipated inflation to lift, right, into the latter part of that year. And even with that, we were surprised to the downside most of the time last year. So I guess inflation really is contained. And then going into this year, we actually see inflation being even softer, right? So it fell from 4.4% in 2024 to 3.2% last year, and we see it maybe even being around 3.13% this year. So I think it's still good. It still speaks well to the inflation trajectory as well as the ability for monetary policy to continue easing.
We are expecting the South African Reserve Bank to announce its decision on interest rates later on this week. What are the consensus looking like?
It seems the market is split at this moment, so it seems like a 50-50 call. There are odds that the Reserve Bank will cut, especially when you look at inflation, as we've just spoken to. They are likely to revise their own forecast downward from the November MPC meeting, so that will be helpful. We've seen inflation expectations trending lower, so that will be something that they read a little bit more information into. But they might also decide to remain conservative, given the fact that they're still trying to guide those inflation expectations even lower, closer to that 3% target. They still probably want to see how much government is pricing in, this lower inflation target into their own budgeting processes. So, it's a bit 50-50 at this point. We are in the camp that says maybe they hold, but tell me the odds that they continue cutting are definitely there. The space is definitely there.
We also see leading business cycle indicator also being released this week. What is the outlook there?
The outlook is that you're probably going to continue seeing as you head over 2025 that the leading indicators suggesting that this economy is in recovery, right? So there are a few bumps along the road, but the general consensus here is that there is an uptick in terms of your year-on-year growth numbers, so that is supportive. We see business confidence moving in the right direction, consumer confidence moving in the right direction, commodity prices supportive. So I think from a leading indicator perspective, that'll continue to show us a recovery in the economy.
And then just casting our net a bit further down the week, on Friday, the trade balance for December will be out. Expectations there?
The trade balance will be a tricky one. While we will likely see, on the volume side, a little bit of pressure. It's the trade dynamics. It's probably the fact that we are seeing imports coming in quite strongly from the east. So maybe, from a trade surplus point of view, we might see a little bit of pressure from a volumes perspective. But Tammy, as I said, commodity prices are still supportive here in terms of our export commodity prices. Oil prices are soft, so that's something that we import. So from a terms of trade point of view, you're likely going to continue seeing that support coming through, maybe even compressing that pressure that we're seeing on the volume side. And I mean, the trade balance is important for what we think about the current account, how much interest rates we need to uphold to draw in those inflows. And I think the story there is still somewhat positive.
Koketso Mano, thank you so much for this Monday afternoon's F&B slot update. You have a good one, ma'am.
Thank you.
Thank you.
For having me.
That's Koketso Mano, F&B senior economist.